Bring in Rupiah Madzen of the Money Desk, and we're talking growth. Let's hope it's the beginning of an upward movement.
Let's hope so, Sally, and we're going to be hearing from an economist about that in a moment. But yes, we are talking about the GDP figures that came out today. A bit of good news for the local economy. Gross domestic product, or GDP as it's better known, grew by a higher than expected 1.9% in the first quarter of this year from 1.4% in the previous quarter. Now, sluggish economic growth has been blamed for the country's high unemployment rate, but Statistics South Africa says that the size of the economy is now at pre-pandemic levels. Let's talk more about this now with Isaah Mhlanga, who is the chief economist at Alexander Forbes. Thank you very much for your time this evening, Isaah. So it's great to see that growth continued from the previous quarter. But should we be celebrating? I mean, do these pre-pandemic levels come off a low base?
The pre-pandemic levels comes off a low base. Indeed, we must welcome the improvement in economic growth, and that the economy is now returned to pre-pandemic levels and surpassed it by some 22 billion rand if you look at the seasonally adjusted annualized numbers. But that the economy is now back to the pre-pandemic levels does not mean we have the same type of economy. We have an economy that has, roughly about 9.3% underemployment, which means employment that is lower than the pre-pandemic levels. So some jobs have been left behind while the economy has recovered. But if you just look at some of the sectors that have continued to perform quite well, about 8 out of the 10 sectors posted positive growth, which is welcome. Obviously, second quarter numbers are unlikely to follow suit, given that we had floods in KZN, also countrywide load shedding. That means we are unlikely to retain the same level of performance that we have seen in Q1. Nonetheless, these are good numbers that we must actually welcome, but not yet cause for celebration.
No, absolutely. We should also bear in mind that South Africa has about 3 years of no real growth. So while there's been some growth in rand terms, this is not a jobs or poverty alleviating economy, is it?
Not nearly a poverty alleviating economy, and this is shown by the jobs numbers that remain well below the pre-pandemic levels. But I think what we also have to welcome is if you look in terms from an expenditure side, where we continue to see the growth in gross fixed capital formation, essentially investment, which went up by 3.6% in the first quarter of this year, following about 1.6% in the fourth quarter of last year. So we continue to see some strength in fixed investments that might say to us economic growth is likely to continue to improve going forward. Nonetheless, if we take the global environment, we are in a global environment that is very different to what we had just before the pandemic. It's a global environment that is facing extremely high levels of inflation, also facing extremely aggressive interest rate hikes from the US Fed, from the Bank of England, also the European Central Bank that is likely to hike rates in July. Also, it's a global economy that is deglobalizing, meaning the benefits of globalization that we saw in the pre-pandemic world are now reversing. We will end up with structurally higher inflation. That's the environment which we find ourselves now, which means it's going to be more difficult or tougher before things get better.
No, from a consumption point of view, Isaah, we had very strong imports and exports. Does that speak to a healthy consumer spending in the first quarter?
First quarter consumer spending went up by 1.4% on a quarter-on-quarter basis. Fourth quarter spending was 3%, which means we saw a moderation in spending. And as interest rates continue to increase and the cost of living that we have been talking about for the past couple of months is food price inflation, which continues to go up. Brazil with the drought, Ukraine issues also pushing food price inflation up. Petrol prices, all-time high that we have seen, even with the 150 that we have been helped by the National Treasury and the Department of Mineral Resources and Energy, which is unlikely to be extended beyond July, is going to come and bite consumers' pockets. And then add interest rate increases that are likely to be aggressive given where inflation is globally, but also where our own inflation is, where we expect it to peak at some 6.8% in the months ahead. all of those are a tax on consumption, in addition to the low job growth and job recovery. All of those mean that household consumption is unlikely to be maintained, at least at the levels that we saw in the first quarter.
Finally, Isaah, based on engagements that you have had, has there been talk about relooking at the structure of the current economy, finding ways to integrate unskilled people into economy, because they are the majority of the ones that are unemployed at the moment? So I'm thinking about things like the infrastructure fund, which needs to be ramped up, is crucial here.
Look, we have seen some growth in jobs from the public sector. If you look at the quarterly labor force survey, it shows 281,000 jobs created in that in the government sector. But if you look in the formal economy, unskilled labor does not generally tend to be well supported, simply because our economy is not geared for that, which is where we need a lot of the change in some of the legislation, particularly at local level, at municipalities, where people can actually generate their own employment through small businesses. That's where we need more support from government for those small businesses to be formed and for people to be able to run their own small business without the red tape that currently exists.
Thank you very much, Isaah Mhlanga, who is the chief economist at Alexander Forbes, joining us this evening to break down those GDP numbers that were released today.